What's up, my people? It's your boy Ola Tony here, and I'm back again with another banker video. In today's video, I'm going to show you guys my secret liquidity sweep strategy. If you want to find out how profitable this is, stay tuned and watch this video. So what's up, YouTube? Welcome back to another banker video. So in this video, I'm going to be showing you guys my liquidity sweep strategy. You understand? This strategy is one of the best, and it's something you guys have not seen before or any other channel. It's not something that is common. You understand? It's very but very powerful. This is a secret I'm going to tell you guys, and what you can just do to pay me back is just to like, comment, and share. Understand? So that you should support me to keep releasing quality stuff like this. So if you've done that, thank you and I appreciate it. So let's dive into the business of today. So now, this strategy, you need to know just the basic smart money concept, you understand, which is break of structure, change of character, and all of those stuff. So that's just it. If you don't know anything about liquidity or everything, don't worry, I'm going to do just a quick introduction. So I'll just use this current trend. So now, how can we know if a trend is in a bullish, bearish, or ranging market? We can know if a trend is in a bullish. For a bullish market now, we can know that a trend is bullish when highs have been broken. For example, what happened here, you can see the market took this high, the market took this high, the market took this high, the market took this high. So it signifies a bullish market, that the market's going up. So for a bearish market, the lows need to be taken. So this low was taken, this low was taken, this low was taken. It signifies what? A bearish market. So very good. So we want to see. So now this strategy works in a bullish and a bearish market. It doesn't work in a ranging market. So now I want to see the market will be taking the lows or the highs to be able to apply the strategy. So now let's use this current one, so we can see that we can see the other flow. We can see that, okay, this low was taken. So now whenever a low is taken, let me show you guys. A low is taking, break of structure here. This is the break of structure. So this low was taken. So whenever a low is taken, the market will go back up before coming down. Like for example, the market can't just break the low and decide to go back down. No, most of the times it's going to go back up, then move down. You understand? So most cases, there are a lot of people that want to buy the market down because they've already seen the market structure, like where everybody knows, okay, people knows this basic knowledge. Okay, now whenever the market breaks the low, okay, the market will reverse back and want to go back down. You understand? So that's the knowledge which most people have. But all those people don't know that there are some people called market makers. So there's people called institutions who are ready to take your stop loss for their own profit. So why don't we trade like these guys? So this is it. So what we are going to do is this. Now whenever there's a break of structure to the downside, the markets will always come back up, then push back down. Sometimes it might tap a fair value gap or this other block, you understand? But we know the markets will still go down to show that we are seeing a bearish trend. So everybody knows that. So but what happened here is this. Let me show you guys what happened here. If you can see the market, if you can see clearly, the market tapped this other block here. The market tapped this other block here and pushed back down. The market tapped this other block. Let me zoom in for us to see, because this is very interesting. The market tapped this other block and pushed it down here. But now you can see I marked up a line here, which is a liquidity sweep, because now a lot of people have gotten on this trade hoping it's going to go back down. It's actually going to go back down, but the market makers want to make more money, so they would love to take you out before going back down. So that's what happened here. That's the manipulation that happened here. So now to enter this trade, let me tell you the time frame analogy. So if you're at the 1 hour, you're going to take your entries on the 5 minutes. If you're on the 4 hours, you're going to take your trade entries on the 15 minutes. if you're on the daily, your trade entries will be under 1 hour. So that's how it works, guys. So now what we're going to do is that whenever we see a setup like this, we wait for the market to fill in the order block. Then we're going to put our trend line on the last candle that rejected the order block and hoping for a liquidity sweep. And behold, it happened. Let's go on to the lower time frame so that you guys can see clearly what I'm trying to say. Guys, these things happen very often, very often. Let's go on to the lower time frame, 5 minutes. Let's see. There you guys see what I'm trying to say. Okay, so here we have it. You can see a lot of stop loss have been resting here. You see what happened here? He created a double bottom to create a perfect entry for you guys. It broke the neckline so that people say, hey, yeah, I'm gonna hit TP. A lot of people put the stop loss here. What happened? The stop loss was ramped and it finally went down. So how do we enter this trade? Now, guys, this is a secret. This strategy is one of the most profitable high risk reward strategy. It has a high win rate and a high risk to reward. Hey guys, let's see what our risk reward will be. So wait for the liquidity sweep. After the sweep, we wait for a change of character. A lot of people don't know change of character, but I'm going to explain that. Wait for a change of character. For example, we can see that according to market structure here, the highs were being taken. So this is a break of structure to the upside, just break of structure to the upside here, then another break of structure to the upside here. Understand? So we have a bullish market structure. So this trend can only be bearish when the lows are taken. So the low here was taken, which signifies a change of character. Whenever a low is taken, it signifies what? A change of character. A change of character, let me write it. You can write it as CHOCH, you know. So that's just it, a change of character here. Then after the change of character, we wait for an order block to be created, or we could tap through a fair value gap. So we have a fair value gap here and we wait for it to be filled. So in this scenario, two things can happen. The order block the fair value gap might be filled, or the order block, this is the order block here, or even this order block here. So to be on the silver side, we can just take our entry here so that we should not miss the move. But if sometimes the market might move up to this level, so we enter our short there, we enter our short here on this fair value gap. Then our stop will be above this high, to avoid being stopped out. Then we aim for what? This low. Where's the low? We aim for this low. So we can see this is a 4.8 risk to reward trade, and this is high quality A setup trade, because a lot of traders have been stocked out here. If you can look at things, a lot of traders were being thrown out. Then we rode the trend with the banks. Understand? So this is how you should trade. This is how you should trade liquidity the right way, guys. So should we take one? Let's see one more example before we end it today. So let's see if we have something here. So a break of structure to downside again. Let me just write it. So this is a break of structure to downside again, then wait for the markets to pull back up. So the market pull back up, the market grab a liquidity here, the market grab liquidity again. You see guys, it grabbed it again. So we can see here that the market tapped this fair value gap here, but as liquidity traders here, we know that there are some chances that some early sellers might be in here, and the market makers are always aware of this. So what do we need to do? We need to take advantage of this. So you always put your trend line above the high of this, because we definitely know that there are some chances that might be taken out, and if they are taken out, that equals a high probability trade. I hope you guys understand what I'm saying. So now we go on to the 5 minutes to spot our entry. So we go on to the 5 minute to spot our entry. Go on to the 5 minute. Yeah, so we can see they were taking out here because they put their stop loss here. Yeah. And after they were taken out, what happened? We wait for the change of character. Change of character was created here. So a change of character happened here. So now what do? We need, so we can use our Fibonacci because to find the premium and discount price. So premium is below. So if it's in a bearish trend like this, premium is below 50, discount is above 50. You understand? So the analogy of this is that we want to buy price when it's cheap, so we want to get in somewhere around here. So we can see there are fair value gaps here, so we need to look for the fair value gap in the 50% level. So this was, no, we are not entering here. Okay, this was an opportunity here where we could have entered, but to be on the safer side, sometimes we can like try to wait to see a reaction from the market. So there was no reaction here, never happened. It never happened. So I think there was some sort of, okay, no reaction here. So there was some sort of reaction here. There was almost sort of reaction here, so we could have entered here. So the thing is that we could have entered at anywhere from the 50% above, but we are looking for a much cheaper price because it's more wiser. We have higher risk reward. You get what I'm saying, guys? So you enter your short here. So we enter our short here from this reaction we got here. So let's say it will be here, then our stop will definitely be here, then TP will be at the low, will be at this low, or we can see 1.196, almost 1.2 smashed. So smooth. So that's it, guys. You can see how smooth and clean this is. We can go on and take different examples, but let's just end it here. So if you want to see more of this, like, subscribe and share this video, so that will keep me motivated to create more content like this. Thank you and stay safe out there.